What's up, guys? It's Mr. Fit to Flourish. Today I wanted to talk about how I made $8,000 in one trade using opportunity. Okay, so when you're trading options, it's all about opportunity, and you cannot just trade options all the time. Options were made to hedge against regular investments, so you have to understand that, and then you have to understand the Greeks and how options work in order to be someone who's pretty consistent with options trading, because you can't just keep trading and trading and trying and trading and trading options all the time. You have to wait for opportunity, and that's the only way. I'm telling you right now, the only way to be consistent and to make money trading options. So what did I do to get this trade? I'm going to pull it up on the screen here. So like I said in my other videos, I like to wait for breakouts or breakdowns, market structure shifts depicted by a 920 crossover. So an EMA, the pink line is my 9, the 9MA, and then the yellow line is my 20MA. So I like to wait for that. I also like to look on my momentum indicator to see, this is my volume RSI. It's a volume RSI. So it's a momentum indicator. If it's curling down pretty fast, that means that we're losing momentum. When it curves up to the upside pretty quickly, typically gaining momentum. And if it stays low, then it's like, okay, no Momo. If it stays high, it's pretty bullish Momo that's going to keep us up in terms of price. Anyways, I'm going to keep this video pretty short and simple. So the day started off, so this is Tuesday, Tuesday 10/14/2024, or 10/15, sorry, Tuesday 10/15/2024. So we started off the day pretty much right where we opened the previous day, okay? Right where we opened the previous day. We were also at a key level. We were at highs from that previous day. I think this was, yeah, this was the double top from the previous day. So we were at highs from the previous day, okay? So are we going to move up anymore? Are we going to make a move to the upside? Well, the market was seemingly bullish, but there was really no news. So to start off the day, we had a fake move to the upside. We rejected that key level, which was highs from the previous day. And then we come down, kind of consolidate here, push back to the upside. Again, we put in a massive topside wick. So topside wicks usually mean and usually depict that there are sellers in that area. So sellers in that area, sellers in this area. And then what I like to do when we start to consolidate like this, I draw what's called a consolidation box. So I draw it around the highs and the lows, pretty much the closes, okay, the closes. So we ended up breaking out of that box and making a huge downside move. Now, I didn't know if this was going to be a true downside move, so I kind of wanted to wait. I should have just got in, honestly. But we had a 920 crossover, and then on the volume RSI, we were losing momentum fast. We were below the 50 on the volume RSI. So I wanted to wait, and then when I saw that we broke this key level. This key level 496.34 is one of my key levels I've had for months. You'll see it in a lot of my other videos too. But once we broke that level, I knew for a fact we were coming down. We were not coming back up. We were staying below the 9. We broke below the 100 MA, and we were coming down pretty fast. So I ended up entering after we broke this key level. This is not the best entry, but I was willing to assume the risk here. I wanted my stop to be this Wall Street hold because I wanted to get in here and I didn't. So I said to myself, okay, if we end up pushing back up and closing above that hold level, then I'm out because this is probably cooked. But I ended up entering here, right below the break of this key level, because the next key level was $3 away at 493.19. I was like, bro, this is crazy. When we break key levels like this, we usually move really quickly to the next key level. So got in there, and then I saw Nvidia selling off as well. So there was just a ton of signs that we were going to be making a downside move. So I got in with this momentum. So this is big momentum here after a breakout. Okay, big momentum. And this ended up just freaking falling out of the sky in 10 minutes. And it printed so fast, it was disgusting. It was like, oh, okay, up 2K. And then it was like, boom, up like 9K. And I was like, holy moly, exit. Didn't get the best fills, but I was literally pressing the exit button. And then it's crazy because I was trying to exit here at the next key level, and we ended up moving even further. So what I ended up doing was, after this second break here, I called out to the Discord. I didn't call this out in the Discord because it was too risky in my opinion. So I took the trade and just kind of ate. But then I went back in on this second downward move, because once we broke 493, I was like, dude, the next key level is another $3. So in the Discord, I called this out on live. I said, guys, I'm getting the 490 QQQ puts. And I mean, if you got in with me, you went up 80 to 120%, because I went up 73% and immediately. And then just I exited on this bar instead of waiting for that push down to 490, because I like to look at, I don't necessarily wait for us to hit the targets all the time. If my options move quickly, 73%, I was up a couple $1,000 again. So if I make pretty good a pretty good percent change in terms of my option contracts, I'm out of the play. I'm taking profit, man. There's no reason to hold on to the bag and potentially get to that next level, or potentially reverse. So as you can see here, we reversed, but we did get to that next level. We could have took more profit there, but exited here at 73%. So pretty good trades there, pretty good trades. But again, what did I do? Waited for momentum, because in otherwise you're getting crushed, because like a lot of these non-trend bars here, if you see here, we just kind of traded in in this little area here. This was a descending triangle, but the next couple days were kind of trash, just kind of moving sideways, not really breaking key levels, not really doing breakouts. It's pretty trash. But when you wait for opportunities like this is where you make money. So wait for breakouts and things of this nature if you want to like consistently make money trading options, at least like trading options. Because like I said, options are inherently extremely risky. They're really used to hedge against your investments. Is what they were created for. They're insurance on stocks. And then options are wasting assets. You need to understand that. So the longer you hold it, the less the value of the contract. Okay, the value of the contract decreases over time, as opposed to just regular instruments. You buy them, usually they appreciate or they remain the same without market events. So hopefully this helps someone out there in terms of like, oh well, what am I doing? Like maybe I could just wait for a breakout. Yeah, just wait for these breakouts, man. Wait for momentum. So momentum will take you to the promised land. So hope you guys enjoyed it. Like, share, subscribe, all that YouTube stuff. Y'all have a great day. Good morning, welcome to the Fit to Flourish podcast. Let's talk wellness, finance, and growth.